Hello and welcome to this week's episode of Market Maker Mondays. For those of you that have actually been following my channel, you will be definitely aware that it's been some time since I've uploaded one of these videos. So just first like to apologise that I've been a bit ghost. I've been navigating a lot in my personal life and I've not been in the right headspace to be producing these videos, but also what I noticed is I was focusing more on creating content for YouTube than I actually was trading and like studying the ICT concepts. And I don't want to do it that way around. There's plenty of people out there on YouTube that are making money from YouTube. And questionably, in my opinion, having watched their videos, are they actually trading or consistently profitable? And I don't want to be part of that crowd. Um, so yeah, just had a bit of time out really. I'm not going to go into it really in any more detail. Just get straight into the content. And what we're going to do is we're going to have a look at the macro view of the indices, the stock market in general, the dollar index, and we're going to have a look right from the top and sort of just take it from there. I've had a brief look at the macro. I haven't rehearsed anything, so if it just seems like I'm working it out as we go along, it's because I am. And I think that's important so you get an opportunity to see into my mind as I have a look at the higher time frames. So I've been having a look at some seasonal tendencies, and the seasonal tendency for January and February on the whole is consolidation, indecision, choppiness, sideways ranging. And I think we are actually now seeing that in the US 500. So if I have a look here, so we've actually got all of this here really from January. So we've had a little push up to take some buy side liquidity, and then we're actually just trapped in this range here. And on the dollar index, we've actually turned bullish in my opinion, which we'll cover as well. But what I want to do is I want to actually go up to the monthly time frame on the dollar index, because when we actually were trading up here, we'd actually got this buy side liquidity, but we've also got this imbalance here. So start as we mean to go on, and you can see how that was beautifully delivered. So we've actually got this fair value gap here. We've got the upper and lower boundary with the mean threshold of that, or the consequence encroachment, as ICT is now calling different things, but I know it likes to keep that to wicks. So we've got the mean threshold there of that, and you can see that we've actually completely filled in this part, which has left this part of the imbalance unbalanced, and then we've got the buy side liquidity here. Personally, I think on the long-term macro, I think this would actually be our draw on liquidity, the buy side liquidity. And then we've actually come down into a discount briefly to this level here, this green box. Highlight this as monthly fair value gap. Okay, and for completion's sake, we'll take it right from the low, although arguably we could go from the other low. I don't think it's going to make much difference though. So either this low or this low. I mean, probably this low, because this is what actually started the move. Either or, I don't think it matters. This actually looks neater from where we've actually rejected here. And then when we are considering swings, we've actually got the beginning of a monthly swing low here, which is forming within a discount. It's in a monthly fair value gap. We've also got this old high here. So this big move up, and from my experience, my testing and my active trading, what I've noticed is, as this looks like a break and a retest continuation, so this looks like a pullback basically on the higher time frame. Often we actually get this move here to trap sellers, which then leaves you with buy side liquidity here, but ultimately loads of juicy liquidity above this high. So with the seasonal tendency coming out of the second to third week of February, right the way through March, the dollar index historically actually rallies. So I think it's possible that we could actually start to see some move higher into this imbalance here, minimum. So that would be the near-term draw on liquidity, which is your monthly fair value gap. There we go. And then what I'll also do is take you to US 500. It looks quite choppy in here. On the daily time frame, this actually looks like an inverted head and shoulders, which what retail traders call. However, ICT would actually call that advanced market structure, where you've got a collection of short-term swing lows, intermediate-term swing lows, and a long-term swing low. However, going up to super macro, the 3-month chart or the quarterly chart, we've actually had this rejection here. If I just put my handy fair value gap tool on, nice. And we've actually got this swing low here. So we don't actually have a swing low on the monthly time frame here. It's right the way up here. So I honestly can't see this move just going from here straight up, just because of how that would look on the chart. That is my opinion. Excuse me, I do have a cough as well, so it might be a bit of an annoying video. So I actually think, like, based on this candle formation here, I personally think we are potentially going to see this top out soon within the next couple of weeks, because we've already reached a premium here on this leg. So if this was going to be an advanced correction, which would be an A, B, C, D move down into this bullish order block here, that would actually confirm what we were discussing. So if I go down to the monthly time frame now, so we're rejecting this level here. This is the, I would say, the intermediate term swing high on the monthly time frame, which is actually the macro. So this would be your swing high, this would actually be your swing low. So this is actually the dealing range, and you can see we just chop it around. We are putting in this small candle. Don't really like this small candle. So this is actually February. Personally, I just think it really stands out. It just looks a bit strange there. And then if we compare that with the dollar index, we've actually had that rejection here. So personally, I would like to see this move up into filling in at least some of this range, maybe the consequent encroachment of this fair value gap or the mean threshold, okay, which would be just basically nice and simple, the 50% mark of this fair value gap. So coming up here, so target 1, target 2, and then full target here. And then if we actually pass past the 50% mark of this fair value gap, then it is fair game for higher highs. And then I will actually be targeting the buy side liquidity up here. Obviously, this is months and months and months away. However, for anybody that does actually do buy and hold investing, dollar cost averaging, and you are actually investing in the stock market, then this is actually going to be some benefit, because when we actually go down to the daily time frame now here, it doesn't look great for long-term lower levels. So we've actually got lots of nested lows here, intermediate, long-term. So this would be intermediate, this would be intermediate, because you've got a short term and a short term on each side, and then they're nested, 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 nested all the way around. So this actually looks like an inverted head and shoulders, and I want to say that it's not going to go higher, because I desperately don't want it to, because I want to see prices come down here, at least to this high here, and take out the liquidity here, and give me an opportunity to unload some size, basically in my stocks and shares ISA. So, excuse me, that's the overall scope of the macro. And then at the moment, we are just currently trading within this range. But if we bring this back to the 2022 model, so starting afresh, we've actually covered all of that. What I'm going to do is delete this, and we have these relative equal highs here. So we've actually taken the buy side liquidity there. We have buy side liquidity here. We are actually starting to reject this here, and we've got no imbalance here at all. So I personally think that this is going to be a low, this is a low resistance liquidity run down to this low. So we're going to have this as my sell side liquidity. This is my sell side liquidity. We've already taken the buy side liquidity here. However, we also are rejecting this. Red box. And then this is the weekly fair value gap to the daily time frame. So you can actually see that we've actually traded above the 50% mark of this fair value gap, which isn't great in the scheme of things. We have actually taken the buy side liquidity here as outlined on the weekly time frame. We are actually now rejecting the bottom of that fair value gap. We've completely rebalanced this price here. So, excuse me, I'm just going to have a quick sip of drink. So what I would, if I was a gambling man, obviously we actually need to see what else is happening in price. So we've got all of this liquidity that's building here. We've got liquidity that's building here. So when we take out the buy side liquidity above these old highs, these equal highs, then it can do one or two things. It can either just blast through, keep going to something like this up here, or some of this imbalance within this range. We can either do a turtle soup formation and then we can just drop something like this here. Yep. Or what we could do is we can actually consolidate. So the fact that we are consolidating here could actually give us an indication that we're building orders on both sides of the market. And the side that has the most to lose is often the one which will lose. So the side that has the most liquidity built up on, or also the most sort of liquidity that's nested or pooled on that side of the market would often be that. But for now, we just need to see this as a trading range. So we can just take it like that. I just put a little white rectangle box around that. Okay, and then go down to the 4-hour time frame. So we've got this consolidation here. We've also got a phantom trend line break as well. So anybody that will be watching this as a breakout of this trend line will be expecting to go short. I quite like that because what we've actually done now, so this will be what retail traders will be expecting. But what I see is a sweep below this liquidity here. We've then come close back up into this range. I personally think we're now going to attack the buy side liquidity. I want the price to just come down. I've been finding it quite difficult to ignore what I want the market to do and to trade it objectively. So what we need to be doing is when we're in a sideways market condition like this, we just basically just chop it around, is we're looking for internal range liquidity to take profits, and we're looking at taking our entries at the old highs and lows. So if we were to have a look here for opportunities, this would have been an opportunity. So going on the 1-hour time frame where we actually sweep this low, excuse me, where we've got this low, this would have been an intraday opportunity for day trading. So you would just pair this up with time and price. So if I go down to the 15-minute time frame, this would have been 9 o'clock. So there you go. If I just turn on this, so this is my 8:30. This is the 9:30 equities open. So this is the news embargo lift. And then what we'd have done is we'd have just looked for that sweep of the south side liquidity and essentially going down. So we've actually got the shifting market structure, and then we're going down the time frames, having a look for an opportunity. So I've reached the 3-minute time frame. Our opportunity would have actually been clearing these relative equal highs here. You can see this candle is a break and a retest. We're now pushing away, we're accelerating away from this consolidation. And then this here would have actually given us our fair value gap. So you can either go 50% of that, or if you wanted to be more keen, you would do that. And then candle 1, 2, candle 1, 2, 3. So candle 1, there's the fair value gap. Candle 3, 1, 2, and 3. So your stop would actually be here, which would also be fantastic, because if you go down to the 1-minute time frame, you'll see that this is probably a sweep of a short-term low. Let's have a look. In fact, no, it's not. So it's actually just trading back down into this bullish order block here. But on the 3-minute time frame, what I like about that, which is a bit of a side note to where I'm going with this, is the fact that you can see that this has, so this is actually a high test candle, and then this would actually, to some traders, look like it was going to then continue to the downside. But the fact that we've actually come down to retest this here, and then we've moved off, this shows that there is an unwillingness to go below this level. So putting your stop loss behind there with the rules of the 1, 2, 3 candle formation for the fair value gap is a fantastic choice. And then what I've actually been doing is I've actually been taking a 3R trade. So 3R would have been there. And as you could see, in this opportunity would have actually been stopped out. So that wouldn't have actually been a winning trade for me based on that. Maybe I'd convince myself that I would have clipped my stop because of this. But if I was following the rules, that would have actually been stopped out for 1% loss. I have actually been doing a lot of testing and live trading, taking profits, internal range liquidity. However, what I've actually found is I'm taking more profit off the table. However, when you actually look at that as an equity curve, because I'm actually assuming a 1% risk, and then I'm taking, say, 50 or 75% off at 1R, it's really not helped my equity curve. So I then stopped doing that, and I've gone with a 3% reward profile, and my profitability has skyrocketed. So that's what I've been doing personally. So in the market condition, which I guess is really just an insight into this choppiness, what I'm looking to do is I'm actually looking for where the liquidity resides on the 1-hour time frame, and also pairing that with the 4-hour time frame. And you can also use other PD arrays as well as lows. So you've got lows here, you've also got highs as well. So you could have that high, which is actually, when it's actually coming back up to the top of this range, you would then go down to your 15-minute, your 5-minute, etc. And you are just looking for time of day as well as the price theory. So I'd be having a look at doing that for some back testing. And then this looks nice for a target. So you've got those equal highs there. We've actually already come off the bottom of that range. So the 15-minute time frame, let's have a look for this, some trend analysis. So we're actually bullish on the 15-minute time frame. So we could actually be heading up to here, which I will be keeping an eye on. But that brings us to a close. We are at the moment just chopping around here. I think that we could actually go higher to go lower. I want it to go lower overall, but in terms of trying to identify a trade opportunity, my suggestion would be keep it nice and simple, keep it nice and short, maybe even just trim it down a little bit and just go for 2% rewards whilst we are within this tighter daily range. We've had a low test here, and then looking back here, we would go further up. So my DDP, the daily directional prediction, would actually be bullish on this. And if I was being super cute with it, it would actually be 50% of the range. So I would only really be looking at trading this back up to the midpoint on this range, because if we are to actually trade lower, the 50% mark of this consolidation or this trading range would actually be protected. So for safer objective, we could do that, unless we're obviously coming up here or trading right the way back down here again as a turtle soup pattern would actually give you a higher potential reward, because we're trading from the upper and lower boundary of that trading range. So hopefully that is a bit of an insight into the macro, what I want to happen, what I can see happening, and also just slowly getting back into making these videos. So I don't want to drag it out too long. If you've got any feedback, or if you've got any requests as well, any suggestions for the channel, please leave it in the comments below. As always, I really appreciate your time, and I will speak to you soon. Bye.